with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, China has been the world's largest manufacturer for 15 years. What does it say about the resilience of China's industrial base despite the global headwinds? And gold prices have reached record highs recently. What is driving this gold rush? And now let's begin with our top story. China's manufacturing sector has achieved substantial progress during the country's 14th five-year plan. Industry and Information Technology Minister Li Lecheng says China's manufacturing output jumped from $3.7 trillion in the year 2020 to $4.7 trillion in the year 2024. China's manufacturing sector now accounts for almost 30% of global production and contributes over 30% to its global growth. By the end of last year, equipment and high-tech manufacturing accounted for more than half of China's total industrial output. So for more on this, join us on the line now are Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, Li Lun, Assistant Professor of Economics, Peking University, and also Yan Liang, Professor of Economics, Willamette University. So I will start with you. China has been the world's largest manufacturer for the past 15 years. So tell us, what does it say about the resilience of China's industrial base?
Right. So I think China really very quickly developed its manufacturing industrial capacity, as you said, in the last 15 years. And I think that was contributed by a few factors, right? That there is the very strategic vision by the government with a lot of policy support, including, industrial policies, trade policies, and many others. And that also reflects the reality that, there are many very innovative entrepreneurs in China that are really pushing forward technological innovations and capacity developments. And then China also has the very large market. And so all of these, I think, are very conducive for China's manufacturing takeoff. And I think what we are witnessing right now is really China is catching up in terms of its value added, and it's really upgrading its industrial capacity. So China is no longer just a so-called world factory. Longer are the days when China had to export 800 million shirts to import one Airbus, 380. Now China is really occupied in many of these high-end advanced manufacturing, and it has 80 advanced manufacturing clusters. So we're seeing both quantitative expansion in China's manufacturing capacity, but we're also significantly seeing the quality improvements and really the leaping forward in terms of its quality of the manufacturing capacity.
And Li Lun, so advanced manufacturing makes up more than half of China's industrial output. How is this changing China's role in the global economy, do you think?
Yeah, I think this further reflects what Professor Liang just said, that China is moving from a low-cost assembler to a high-value innovator to the world. So we're seeing, for example, in equipment and high-tech manufacturing, these accounted for 34.6% and 16.3% of the above-scale industrial value added. So combined, these account for over 50% of the entire composition of the manufacturing. And some examples of China's high-tech advanced manufacturing include smart factories. So companies are adopting robots and automated production lines and IoT systems to boost efficiency and reduce operation costs. We're seeing adoptions in the production of new energy vehicles, also in terms of shipbuilding, high-tech equipment, AI and industrial internet. So I think we are seeing that Chinese manufacturing are not simply, increasing the volume. It's actually, increasing its efficiency. So basically, we're thinking, China's, if we think China as a huge factory, the factory is not only producing more products, but it's also producing more products in a more efficient and cost cost-efficient way, and also, innovating a lot of, new technologies down the line. So I think this is a very healthy, very promising, prospect for China's, role in the world.
And Dr. Zhou Mi, so an industrial report says China is moving from the world factory to a global supply chain hub. So what does this mean in practice?
Well, I'm now in a very important place of Beijing. That's a Capital Steel Park, which is a kind of a very important site for China's development of the manufacturing. If you can look at those facilities, it was built about 60 or 70 years ago. But now it has been changed to another kind of very interesting places for the people to interact with others. So as for the hub, I would say that China is a huge country. We have so many possibilities. All the the important trading partners are having China as the number one trading partner. So we have so many requirements by the different countries that we can do business with them. The manufacturing means sustainable and also kind of resilience of the supplies. So I think that a lot of people just come here to buy the things from China, and they are also trying to give their products to China. So in China's market, you can find it is a much easier way to find the right thing they want to have. Like we know that in the past, Guangdong, especially Guangzhou, is one of the key areas for people to find the right partners in the supply chains. But now we are seeing that there are more diversification of the choices. Some people go to EU to buy the small commodities, and some people go to another cities like in Shijiazhuang to buy some of the medicines, and also something to do with some other cities. So it's a kind of more diversified places in China. And the people, no matter whether they are interested in the manufacturing products or kind of consumption products, they can always find some very important partners here in China. And another very important point is that when they come here to China, they found some reliefs and also the trust to do with the businesses, which is very important because we have to keep the tariff low, and we are helping to facilitate the trade in a better efficiency. That's really helpful for the world to fight against the uncertainties.
And so, actually R&D expenditure among Chinese manufacturers has climbed to over 1.6% of revenue, with strong innovation in the aviation, biotech, and artificial intelligence sectors. So what is your assessment of China's science and tech innovation in recent years? And could you give us some examples?
Right. So I think, as we just talked about, China is really leaping ahead when it comes to technological innovations, but also advanced manufacturing capacity. And I think that is largely thanks to this very plentiful, very keep rising R&D spending, and that is both from the public sector. The government has been spending on supporting, basic research and some applications. So that is the public side of the innovations. But then there's also the private side in terms of entrepreneurs, enterprises. They are also spend a lot on the R&Ds. So when we look at, for example, according to the World Intellectual Property Organization, the WIPO, China now is the second largest country when it comes to corporate R&D expenditure. So in 2022, for example, there are 679 firms in China that are among the top spenders on R&D in the world, with a total R&D investment of over $200 billion, and that is a 16.4% increase year on year. And so, we are familiar with some of the ones that are often, known for the technological innovations. Huawei, for example, they spent $22 billion or 16% of their net revenues. That made them the top three in that global, firms that are spend the most on R&D. Other companies like Tencent, Alibaba, Cameron, SMIC, and some other biotech companies, aviation, all of these firms are spending a lot on their R&Ds and also in recruiting and training their human talents. So I think this is really important, and I think that just defined the mystery that many times in the West that says, China's R&D is inefficient because it's mostly government driven. The reality is that, the private sector, the enterprises, they are also very keen on R&D and spend a lot to support the efforts to promote technological innovations.
And Dr. Zhou Mi, so China's new energy vehicle sectors has seen rapid development. And last year, China's production of NEVs exceeded 13 million, topped the world for the 10th year. So what enables such a dramatic leap in less than 5 years?
Well, I think that this comes from a very important message. The Chinese government is promising that we have to reach our targets of reducing the emission of the carbon. I think that it is not just a signal. I think that all the industries and also the society are responding to this kind of signals. We have to do everything to reduce our carbon emission from the manufacturing to the consumption. And transportation definitely is one of the most important ways for us to reduce the carbon emission. So that the demand from the market are really our key driver for the enterprises to know the potentials. Well, we have another policies of lifting the restrictions on the foreign investors in China, especially in the automobile industry. So Tesla came here, and they also bring some of the impact to for China's domestic competitors. So I think that based on the previous decades of experiences in the automobiles and some of the innovative ways of doing businesses, the enterprises are responding very quickly. So we are seeing the emerging several manufacturers in the NEVs, and they are producing the products in a very quick way. So it's a very short term for the generation to evolve, and that's have given the market a big surprise. I would say that the surprise has driving all the consumers to think about again about whether they want to still use the traditional ones or the NEVs. And another area is coming from the infrastructure. The government is providing a better support for the charging infrastructure and the environment to using the NEVs. That definitely is creating a super large market in the China's domestic market, while the other countries also see the opportunities. So it's no wonder we are seeing that Chinese NEVs are so popular, not only in China, but also in many other countries in the world.
And the country's shipbuilding industry also leads the world in the international market. So, Dr. Zhou Mi, could you tell us more about that?
Shipbuilding is another story because, when China is trying to catch up with our, competitors from Japan to South Korea, we are actually learning something from them. But in China, we have very important advantages of collectively collaboration. So I went to several cities like in Shanghai, Jiangsu, and also Guangzhou. The shipbuilders are really active in trying to understand the demand from these customers. Well, we have another advantage, that is the steel industries, because the shipbuildings really need the support from the raw materials. So we have such a large importance for the capacity building. Well, for the market demand, I think that they are also very, very supportive because the world is needing more transportation, especially in the maritime transportation. So the combination of the China's trade and also the demand of the world for the global recovery of the trade has pushed the shipbuildings into a very flourishing cycle. And to compete with our competitors, I think China's providers are more efficient, and they can catch up with advanced technology and the use of the more green fuels, and that's also helpful for them to have a bigger market share.
And so for other countries, should China's manufacturing rise be seen as an opportunity for cooperation or a threat to domestic industries?
I think China presents a lot of opportunities for other countries. I think, as you mentioned earlier, that the industry report that basically is the China Federation of Logistics and Purchasing, they made the point that China is not just a product exporter. Now China is a capacity exporter, which means China doesn't just sell other countries' finished products. In fact, China actually goes to other countries and build a manufacturing ecosystems, be it battery factories, or be it new materials factories. And through the BRI, China was able to really establish a lot of manufacturing hubs and capacities in various countries. In countries like Ethiopia, they build factories that would make shoes, make textiles, and so on and so forth. So I think China should be seen as a opportunity. We also saw some paper that shows China's low carbon technologies that actually enabled many countries to cut their carbon emissions, not only because China is able to bring down solar panel prices, but also China is transfer certain technologies and help other countries to build renewable energy capacities. So in all these cases, China is an enabler. China brings opportunities. So I think the best way is to cooperate in places where they can, but also compete in a fair way. And that is actually helping both China and other countries to be more competitive, to be more innovative, to really have a race to the top. And so I think that is the best strategies in terms of engaging with China.
And Dr. Zhou Mi, so what do you think about that?
Yeah, I agree that Yan has mentioned that we have trying to provide more opportunities, especially for the countries who are not able to produce their products by themselves. And I want to add another point. That point is that we are not only provide the products and also the solutions, but we're also trying to give them more abilities, like in the mechanism, design, and also trying to have a better environment. So like in the Belt and Road Initiative, we are not just trying to make the products to be exported. We are trying to help those countries to have a better abilities in the manufacturing. So the industrialization is one of the priorities for so many countries. I think that the development of Chinese manufacturing are really giving more countries more hope that they can do more to improve their manufacturing abilities, no matter how low they start from. So this actually are very important for the countries to have a better choices to support the people with more jobs and employment.
Well, we're speaking with Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, Li Lun, Assistant Professor of Economics, Peking University, and also Yan Liang, Professor of Economics, Willamette University. And after a short break, we'll take a look at what is driving the latest global gold rush. Stay with us.
Welcome. I'm Elaf Ellard, economics professor and member of the Data Science and AI Center at New York University, Shanghai. On the World Today program, you can find in-depth and impartial insight, as well as critical commentary on key trends in the Chinese economy, financial technology, business, and blockchain. To prepare for the world tomorrow, join me on World Today.
Hi, I'm Einar Tangen, a political and economic analyst and senior fellow at the independent Taihe Institute. World Today is news without the hype and business commentary that is informed and up to date, presenting the facts and asking incisive questions. So, join us if you are someone who needs to know what is happening in China as it is happening.
You're listening to Biz Today. I'm Zhao Yang in Beijing. Gold prices have reached record highs recently as expectations for the U.S. interest rate cuts and concerns over central bank independence fueled the metal's sharp rally. The rally has been remarkable. It is up 9% in just 3 weeks and more than 35% since the start of the year. Gold price has more than doubled in the past 3 years, driven by increased geopolitical, economic, and trade risks. So, why is everyone rushing to gold now? And what are the main factors driving up the gold prices recently?
There are a number of factors that drive the gold price and also the rush towards gold. One has to do with economic uncertainty. So there is the fear of global recession, slow growth, or heightened inflation. So all of these help to push investors towards gold because gold is always viewed as a barometer of fear, risk, and long-term value. So when economic times seem to be more uncertain, people would rush towards gold as a store of value. And second reason I think has to do with geopolitical tensions, because there's a lot of conflicts in the world right now, in the Middle East, in Ukraine, and there's also a lot of policy uncertainty when it comes to trade, investments, and immigration. So all these create, geopolitical realignments, and so there is an increase in demand for gold as a safe haven assets. There's also really the evidence that shows many central banks are diversifying their portfolios towards gold away from the dollar. So the so-called de-dollarization movements by central banks. And last but not the least, I think there's also the U.S.'s own policies that really loom large in this picture when it comes to potential inflation due to the tariff policies, the weaker dollar in these days, and the potential rate cuts by the Fed. So all of these, I think, again, push the gold rush. There's definitely other growing retail and institutional demands for gold, but I think the major events are economic uncertainties, geopolitical tensions, the central bank's diversification. Those are really the driving force for the gold.
And so, Dr. Zhou Mi, the US dollar is down 10% this year against the basket of its peers. So what are the main reasons, and how do you see the dynamics between the gold and the dollar will evolve?
Well, we know that gold is a kind of a very important metal. This metal is restricted by the production abilities of the world. So it cannot improve suddenly just because of some affairs happening. But US dollars is not. When the Fed Reserve is trying to, provide more supplies, or they can print more. So the valuation between the dollars and the gold are very direct. That the gold is much more stable, but the US dollar is not. When the world is, especially the investors, are saying that US dollars is going to have a more supply, or based on the debt issues or other kind of issues, maybe the investors will turn to the gold. So I would think that still it's a really a changeable time when we discuss about uncertainty. As Ian has mentioned several factors, but I think that another one is stable coins, when it is appearing to have some position in the transactions and also international disputes, settlements. So I would say that these kind of issues are trying to make the investors in much more dilemmas to find out what should be the right things. Because U.S. government is still very powerful, but when they are trying to look at the investment value, they have to take careful about what should they trying to decide. So for the depreciation of US dollar, I don't think that is a kind of unnatural result, because that US government is trying to do more to interfere with international relations with many other countries, including the trade areas and also the some other area for the investment. And all these kind of actions are destroying the credit of the US dollars credit. And I think that is definitely not so good for the people to believe that if they're holding the treasury or other kind of treasuries supported by U.S. government, they can benefit more longer term. So they are thinking about the balance between the risks and the returns, and some of them are thinking about the diversification of the investment to have a better portfolio values in the coming future.
And yeah, you earlier mentioned the Federal Reserve's policy moves. So if the Federal Reserve delivers a bigger than expected rate cut in September, what kind of short and long-term effects could we see on the gold prices?
Well, I think if the cuts are bigger than expected, then again, that could fuel inflationary expectation. And so that would push the gold price even higher. And the rate cuts would also made the US dollar even weaker because the interest rate and exchange rate have these arbitrage relationships. So if the dollar gets weaker and again expected to continue to be weaker, then investors would want to buy more other assets than the dollar assets for the fear of losing the exchange values. So these in the short term, a bigger than expected cuts would definitely drive up the gold prices. In terms of the long-term prospect, I think, given the fact that we have a very, geopolitically uncertain world, I can see that the gold price will continue to rise because of demand is going to continue to rise. We're seeing now gold has, taken 16% of the global official reserves, with many of the emerging markets like Poland, like China, India, Kazakhstan, Turkey, all of these countries' central bank are loading up their gold purchases. And I think investors are, again, diversifying, even though gold, unlike bonds or stocks, it doesn't really pay any coupons or any returns while you're holding them. But again, it is a good sort of instrument when it comes to risk diversification. So I think as long as we have this uncertain global environment, I think gold would remain to be very appealing to investors and central banks.
So Li Lun, so should everyday investors consider gold as part of their portfolio right now, or is it too late to jump in?
I think gold prices are high amid, geopolitical pressures, uncertainties about the future rate cuts. So I think for everyday investors, my personal suggestion is not to, participate in the hype. Maybe observe for a little bit and see if it's the increase or the gold rush continue to rise. I still think, for example, for a lot of Chinese investors, we're not having a lot of inflation expectation. So holding, RMB or, just, holding or saving in the bank is actually a very, very good choice.
Well, we're speaking with Li Lun, Assistant Professor of Economics, Peking University, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. And that's all the time for this edition of Biz Today. To listen to this episode again or to find more previous episodes, you can download our podcast by searching for Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.